Hello, my name's Craig Elam, Senior Market Analyst at Oanda. Today we're going to talk about the pound versus the Canadian dollar. Quite clearly one of the more interesting currency pairs right now, given that there's so much focus on the UK and therefore on the currency because of the Brexit situation, but also because we've got a big driver in the Canadian dollar being the movements in oil, which is creating these moves in this particular currency pair and has the potential to move them much further. If we start with the former issue, we're now in a situation whereby Theresa May, the UK Prime Minister, has put in a request with the EU 27, which is being discussed at the time of recording, for an extension. Now, the terms of the extension are still not known. Theresa May has requested one till June 30th, just before the new EU Parliament sits on July the 2nd, and the idea put forward by Donald Tusk is for a flexible extension for 1 year, one whereby if the UK agrees a deal with the EU and it's passed by Parliament prior to that 1 year extension deadline, then the UK can leave at the time rather than have to wait until the end of the 12 months. Now, it's not clear at this moment in time whether the rest of the EU 27 will go for that, but it is something that's still playing out in the markets right now. And what we're seeing on the back of this is the pound is volatile, but we're not necessarily any movement out of the recent ranges which we've been trading within. And this is in a number of sterling currency pairs. But we are seeing movement in the pound Canadian dollar, and we are seeing movements towards the bottom end of the range and out of the bottom end of the range here. And the reason for that is because of what we are seeing materialise in the Canadian dollar. The Canadian dollar is highly correlated with the movements in oil, and oil has continued to climb high. We've broken through recent resistance in Brent and WTI crude, and that has lifted the loonie in return. So what we've seen now is the pound Canadian dollar putting pressure on those 174 levels and potentially open up moves further below. In terms of next major support here, then 170 is the most obvious support should we break and hold below those 174s. But even without the Canadian dollar movement in this, there is potentially other pressures building to the downside for the pound. Like I say, this is still Brexit related, but it's in terms of the outcomes. People are very focused on two outcomes. Either we get a deal or we get no deal. The deal is seen as being beneficial for the pound. No deal is seen being very detrimental for the pound. But the most likely outcome at this stage is that extension. So what does this mean for the pound? Well, if we look at the price action over the last few weeks, every rally we've seen in the pound has been sold at lower highs. And this is while the extension is becoming increasingly likely. That suggests to me that in the near term, an extension could be seen as weaker for the pound. Not necessarily because it's detrimental to the economy or not necessarily because it's detrimental to the outcome of Brexit itself, but probably because it's entirely priced in at this stage or largely priced in at this stage. So what we may actually see is an extension could potentially prompt some profit taking, and maybe that's why some of the downside pressures are building in the currency. Of course, this can all change, and the terms of the actual extension itself are going to be key here. But when we're looking at the price action that's building up in this particular pair, there is a lot of pressure building to the downside, 174 support and 170 the next major level below here.